Hi friends. So now in this video let us go for continuing the consignment topic. So here we are discussing about in the last video we have discussed about the journal entries and the ledger accounts to be prepared in the books of consignor. But in this video we are going to learn about journal entries and also the ledger account to be prepared in the books of consignee. Let us start with the thing now. So let us put the heading in the books of consignee. In the books of consignee, what the account will be prepared is consignor account. Consignor account will be prepared in the books of consignee. That means a consignee prepares only the consignor's account. So for the first entry will be what? So to start the business with the consignee, consignor ask for advance, right? So for advance payable, or paid or payable, for the advance payable the consignee will write entry as he will be making consignor as a debtor because that advance is received by the consignor. According to personal rule, debit the receiver. So consignor is a receiver, consignor account debtor to who will be who that is to be paid in the form of cash, that can be paid in the form of check, that means bank, or bills payable account, cash or bank or bills payable account. So entry would be consignor account data to cash or bank or bills payable account. The second entry is what? Then what will happen? The consignee will be incurring the expenditure, right? For expenses incurred, he will be writing the entry as for which the expenses incurred, consignor should pay the expenses, right? The consignor should give back the expenses what incurred by the consignee, that is usually paid by consignee on behalf of consignor. So he'll be making consignor as a debtor. So consignor account debtor to same entry to cash or bank account. Here that will not be paid in the form of bill. Okay, consignor account debtor to cash or bank account. Then for the next thing, after expenses incurred by him, then the consignee will be selling the goods, right? Then for sale of goods, here in this sale of goods, the amount which the consignee receives will be payable to the consignor, right? For which he will be making consignor as creditor to consignor account, and that amount will be received in the form of cash or check, for which he writes the cash or bank account debtor to consignor account. And the next entry is what? After selling the goods, the consignee should receive the commission from the consignor, because consignee works for the only thing for commission, receivable. So the commission will be like an income to him, the consignee, and expenditure to consignor. Commission receivable he will be writing. For the commission receivable, he will be writing the entry as he will be making consignor as a debtor. So consignor account debtor, because the consignor should pay the amount. Consignor account debtor to what? Commission. That is an income. Income will be represented by the name as it is. Okay, income always having the credit balance. And the next and last entry is what? After the commission receivable, then he should pay, that means what? The consignee should pay the balance back to the consignor what he remained with, right? Then for that commission, so for the balance due, he'll be writing the entry that the amount will be received by the consignor. So debit the receiver, consignor account debtor 2, he'll be paying like cash. Usually demand draft will be paid, or any simple you can call it as draft. The draft should be sent to the bank, that means directly through bank account we can write. Okay, at most we are going to take into the bank, right? So he'll be the consignor will be receiving the money, consignor account to bank account. So these are the entries which the consignee records in the books of himself. Okay, now let us see how he will be making the account. So consignor account, consignor account. So for the first one is what, for the commission payable, consignor account to cash or bank or bills payable account. Okay, that is what the entry is. For expenses paid by consignee on behalf of consignor, he will be making consignor as a debtor because he should give the expenditure, but directly the consignee will be incurring the expenses to cash or bank. And the next transaction, for the commission receivable, consignor account data to commission account, because the commission is receivable from the consignor, he will be making consignor as a debtor. So consignor account data to commission. And next, in the credit side, he will be writing the sale value. Sale value for the sale of goods. For the sale of goods, he will be writing the entry as, one second friends, yeah, for the sale of goods he will be making the consignor as creditor, because the consignor will to the consignor only the amount is payable, so he will be receiving the cash or bank. So that would be the use value here. And later, if any balance is there, he will be writing that like bank account. That means bank draft will be payable to him. So in the total this will be the ending for the consignor account. So that will be the thing here. Okay, and now let us go for next concept. Now let us take some problems. From any material we have. Okay, 1 minute friends. So let us now take some example from the ICAI material. X sent on 1st July 2019 to Y goods costing rupees 50,000 and spent rupees 1,000 on packing etc. On 3rd July, Y received the goods and sent his acceptance to rupees 30,000 payable for 3 months. Here what we can say here is the amount 50,000 is the goods sent on consignment, and this 1,000 rupees is expenses incurred by consignor. Okay, and this 30,000 which we can call it as advance. Okay, payable for 3 months. Okay, 30,000 rupees is like an advance here. Y spent rupees 2,000 on freight. Y is a consignee here and X is a consignor. Okay, so 2,000 on freight and cartage 500 and godown insurance rupees 300. So expenses by consignee here is what, 2,500 300. So 2,800 is the total expenses incurred by him. On 31st December 2019, he sent account sales. Account sales is nothing but that is a document. So when we come to here account sales, there are two types of things here I forgot to say. First one is pro forma invoice, and next one is account sales. So these are the two documents which will be sent by consignor and consignee, okay, in the same order. So pro forma invoice is the document which will be sent by consignor to consignee, in which what he says about is selling price of the product, goods set on consignment, and he will be saying the expenditures which he has incurred, or he may say or he may not say. So those are the things which will be there in the account sales. But here when he comes to the account sales, sorry, that is on pro forma invoice. But when he comes to account sales is this is a very important segment. Account sales is a document which will be sent by consignee to consignor, stating the amount of goods sold, and if unsold stock is there, he'll be saying about unsold stock. He'll be saying about unsold stock, and the expenses incurred by him, and commission will be deducted by him, and also the balance due. So these are the things which the account in which the account sales is there. These things will be there in the account sales, okay. So this is what account sales and pro forma invoice is. In this pro forma invoice there will be goods sent on consignment and a number of goods sent, and except, and this will be the there. And I think he may not be saying his expenditure incurred that for that. Okay, let us take this one. So we have discussed about the account sales and the things which are related, which we have forgot to explain about. Now let us go for the first illustration, and also we have seen that consignee's expenses is 2800, 2000 plus 500 plus 300, 800, 2800. Okay, and next one is what? On 3rd July 2019, and also we have seen all the things, right? Account sales along with the amount due to X, showing that 4 by 5 of the goods sold for 55,000. Okay, and Y is entitled to a commission of 10% on the one of the customers insolvent and could not pay rupees 600 due from him. This will not be coming into the things. Show the necessary journal entries in the books of consignor. So we have to prepare the journal entries and also ledger accounts. Of course, let us prepare the ledger first. Journal entries, journal in consignor's book. First entry is for what? For the goods sent on consignment. For the goods sent, he'll be writing expenses or the entry as consignment account at R to goods sent on consignment account. This is the value of 50,000 rupees. Okay, for the expenses incurred by consignor. Sorry, for the goods sent by consignment, he'll be writing the entry as consignment account at R to goods sent on consignment account. At the time of writing the journal entries, we shall prepare the ledger account also. So consignment account, the books with the accounts which will be prepared by consignor is consignment account, consignee One second. Consignee account, and the next one is goods sent on consignment account. First of all, what we do is we shall complete the ledger accounts and later we shall write the journal entries. Okay. For the goods sent on consignment, he will be writing consignment account data to goods sent on consignment account, right? So consignment account data to goods sent on consignment account 50,000. For the expenses incurred by consignor, he will be writing the entry as consignment account data to cash or bank account. So for the expenses incurred by consignee, he will be writing the entry as consignment account data to consignee account. Okay. For the entry expenses incurred by consignee, he will be writing the entry as consignment account data to consignee account, which is Y account. Here they have given YX as EXE. They have given the entry as X as EXE and Y as WYE, but we may consider this as X and this as Y, right? Okay, to Y account. And for the commission receivable, he is writing the same entry consignment account data to Y account. Okay, and for the sale of goods, he will be writing consignee account data to consignment account, because the consignee will be like a data for the consignment business. By Y account, so this is expenses in bracket, this is also expenses, so that we may not confuse. This is for the commission payable. Okay, by the Y account, this is for sale of goods. And next one is what? By consignment stock. We have to calculate this consignment stock also, because directly we cannot write, right? This is working notes in bracket. We are going to follow the working notes, and if there is a profit or loss on consignment, we cannot know. So in consignee account, the consignee has paid the advance, for which he had the entry cash or bank or bills payable account data to cash or bank or bills receivable account data to consignee account, right? So by bank account, let us write it here. Okay, I think as they have mentioned the 3 months date, by bills receivable account we can write that is like a bill. Okay, I think that is of 30,000 rupees. We have seen that, right? Simple. If you know the consignment account, you can write the consignee account simply. So here for the sale of goods, Y account data to consignment account. So in consignee, Y is what here? Consignee, right? So Y account data to consignment account. Okay. Next is what? By consignment. 1 second, friends. And this is for expenses incurred, and by consignment, this is what we can say it as commission. Okay, and for the balance, by bank account we can write. Simply he did not mention. Yeah, he also sent let us here usually we may write balance carried on, or we may write bank, and in bracket we can write balancing also, no problem for that. You will not lose any sort of marks here. Okay, and in goods sent on consignment account to consignment account. So this is what? 50,000 rupees, because the goods sent on consignment value 50,000, and of course it is to be transferred to the trading account by trading account. By trading account, same amount of 50,000 rupees. 1 minute, friends. As we are not having any more entries, we can directly. So that is what we can close, like the consignee account, sorry, goods and non consignment account. Okay, and now let us go for seeing all the values which we are having. Don't forget don't feel that I am leaving the space there. I'll be filling that within a few minutes. Those are for journal entries. If you complete the ledger accounts, that would be like the final step. So what happened, the excess spent for rupees 1000, x spent rupees 1000, and y also spent rupees 2800. X spent rupees 1000, this is of 2800, and also they have said that showing that account sales, he is showing that 4 by 5 of the goods are sold for rupees 55,000. That means what sale value is 55,000. Sale value is 55,000 rupees. So we can write the same thing here. Okay, 55,000 rupees. And now the expenses incurred by consignee is 2,800. And what will be the commission receivable by consignee? He is, I think, 10% he has provided. Yeah, 10%. The 10% will be provided on sales directly. Don't no thinking about that. That would be paid from the sale commission, which is what, in bracket 55,000 into 10%. If 10% is there, you can reduce 10, you can write down the remaining value there outside. That would be 5,500. 5,500. Okay, the commission is of 5,500 rupees. The reason why we have not completed the journal entries and why we are writing first general ledger accounts is because if we complete these ledger accounts only, then we can know the profit. If we complete the consignment account, and we can know the balance on consignment by preparing consignee's account only. That is why I have prepared first the accounts, and later I'll be writing the journal entries, because if we write the ledger account also, you can write the journal entries directly. Usually this will be asked. Usually, I'm not saying confidently. Okay, that is what the 55,000 total value is. So if we reduce all these two things, we can know the balance receivable 55,000 minus 30,000 minus 2,800 minus 5,500 is 16,700. $16,700. So this is what the thing is. Let us go for value the unsold stock. I said that we are going to follow one working notes, right? Let us do the working notes here. working notes. Okay. Cost of goods unsold. Is 1/5 of, so we have the value of total 5/5. That means total of 50,000 goods. So unsold goods worth would be 50,000 by 5, which would be 10,000 rupees. First cost of goods unsold is, one second, that would be 10,000 rupees, right? Okay, I'm sorry, that is not 50,000, that is 10,000 rupees. I'm very sorry for that. Fifty thousand into 1/5, that is of 10,000 rupees. And if we add, for this we have to take the proportionate expenses of both consignor and consignee. Okay, and only that non-recurring expenses incurred. Okay, first plus 1/5 of non-recurring expenses of consignor. 1/5 of 1/5 of rupees 1,000. That is 200 rupees. Plus proportionate non-recurring expenses of consignee, that we can find out here. Let us see. Okay, what it is here. Insurance, no, 500 for cartage and 2,000 on freight. So these both are, sorry, yeah, 2,500 is the expenses which he has incurred. So 2,500 up to the transportation. 2,500, that means what? 1/5 of 2,500, that would be what? 500 rupees. So 10,700 rupees is the total value of unsold goods. Okay, 10,700 rupees. ₹65,700. Minus 50,000 minus 1000 minus 2800 minus 5500 is 6400. That is what the balance is. That is to profit. Is of 6400 rupees. So let us go for doing now the general entries part. Okay, and here we are having the profit of rupees 6400, and also the consignment stock also been calculated, and the balance due from the consignee has also been calculated. Let us go for completing the journal entries so that the problem will be completed. Next, for the goods sent has been the entry has been written. Consignment account at goods sent on consignment account, which is 50,000 rupees. Actually you can write the narrations if you don't write the headings. Okay, that is what the thing is here. Next, for the second entry, which is for advance from consignee. Okay, let us go for taking this as this is the general entries. Let us go for keeping headings. 1 minute, friends. Yeah. What is the thing is here? Serial number. Actually, there should be date, but here there is no date, so we can offer having. Actually, there are dates, but in consignment business, dates are not mandatory. But in depreciation, without dates, you cannot do anything. Date, serial numbers, and particulars. Date, particulars, ledger folio number, debit rupees, and credit rupees. One second. One second. Okay. Yeah. Let us go for continuing with the things. Okay, first entry is for the goods set on consignment account at R2. To goods sent on consignment account 50,000 rupees, right? So I'm not writing narrations. You can write the narration as being goods sent on consignment. Next entry is for advance received from the consignee. 1 minute. Yeah. For the advance received from the consignee, we can write the entry as cash or bank or bills receivable account at R2 consignee. But here what happened? He gave his acceptance, and for the bills payable at the rate 30,000 payable at 3 months. That means the bill has been drawn by us on the consignee. Why? For which we write the entry bills receivable account at R2 bills receivable account at R2 consignee, which is Y account. Okay, for rupees 30,000. Next entry is for expenses incurred by consignor. So for the third question, for the third entry, for expenses incurred, he'll be writing the entry as cash or consignment account. Expenses is always debited to consignment account, right? Consignment account at R2. Cash or bank, we can write, or bank we can write directly. Okay, consignment account at R2, cash or bank, rupees 1000 I suppose. 1000 rupees, huh? Let us go for checking. Yeah, for packing he has incurred that 10,000 rupees expenditure. And next fourth entry is for expenses incurred by consignee, for which we had the entries consignment account at R2, consignment account at R2, consignee by account. How much? Here there are 2000 rupees. Yeah. Here there are 2000 rupees and 500 for packing, for 500, 2000 for flight. Cartage rupees 500, and also for go down rent and insurance rupees 300. You will be getting doubt that why we did not consider that 300 rupees, because the 300 rupees is for go down and insurance that the consignee will be doing every time, that is recurring expenses. But not recurring expenses are the expenses which are incurred from the boarding point to the go down, which would be, and this plus 300 expenses totally by consignee is for our goods, that means for the consignment goods is 2800. But at the time of calculation of unsold goods, we have to take only the non-recurring expenses, which is 2500. And in this also we have to take proportionate part of 1 by 5. So but here consignment account to consignee account, which is 2800 rupees. And next entry, for sale of goods, what entry you have to record? It is an income to consignment, so credit to consignment account to consignment. Okay, and we have to make consignee as a debtor, because we have to receive from the consignee. Who is that consignee? By account debtor. Why is the consignee? So I think he has sold the 4 by 5th of the goods for rupees 55,000. You can see here. This is 55,000. So next one, sixth entry is for what? Sixth entry is for, as he has sold the goods, then we have to calculate the commission payable, for which we have to make consignee as a creditor, and consignment is for the expense that is expenditure to consignment business. So debited to consignment account. Consignment account it are to consignment account it are to consignee account Y account. But in case of consignee, we have to, in the books of consignee we have to make consignor as a debtor, and commission is an income, we have to credit it that one. So consignment account to consignee account, we have to, I think we have calculated, that is 5500, which is 10% of 1 second. 10%, which is 5500. Okay, and next one is for what? For the unsold goods, that means for the consignment stock. We have to write the entry. 1 second. For which we have to write the entry as It is an income. Actually, we have to credit it to consignment account due to matching concept, for which says that whenever any particular revenue generated, to generate that revenue, how much cost incurred, that should be matched, right? Due to that concept, we have to credit it to consignment account. Actually, that consignment, that the matching concept will be talking about trading account, but here also we are going to talk about trading account. The consignment account is similar to the trading account only. That is what the thing is. So consignment stock, it is an as it is a stock which is having a debit balance, we have to debit that one. Consignment stock account at R2, consignment account, consignment account, which is how much? Let us go for seeing here. Yeah, 10,700 rupees. Which is 10,700. So how we have taken this 10,700, I'll be explaining you once again after taking the journal entries. Okay, eighth one. Next one is what we can have here is profit on consignment. Profit on consignment entry. Consignment, it is a okay. Consignment account at R2. Consignment account at R2. Profit and loss account. How much profit we have got? Let us see here, 6,400, which is 6,400. And the next entry, for the balance due, we are going to receive the form in the form of a draft. That means we have to receive we have to write the entry as, one second, bank account at R2. The draft or check is of same kinds only. Bank account at R2, consignee account. Okay, because we have to make the consignee is the giver, so we have to make the credit. We have to make Y as Y in. We have to write Y in the credit side to Y account. Okay, which is of rupees 16,700. Okay, next entry and the last entry here, what we write in the books of consignor is goods sent on consignment account at R. Consignment account at our trading account of 50,000 rupees, because we have to transfer this consignment stock to, sorry, the opening stock to trading account only, because that would be the final statement, financial statement. That is the first part. That is what the thing is. Now let us see how to calculate the consignment stock once again. Let me write the formula also. One minute. So heading calculation of unsold stock, for which we write the first thing as A, cost value of goods unsold. Here in this thing, 4/5 of the goods have been sold by the consignee. That means what? 1/5 of the goods are unsold, right? Then of the total goods means what? 50,000 the goods which we have sent. That would be what? 10,000 rupees, right? ₹10,000. Okay, 10,000 rupees. And next is what we have to take here is proportionate 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 non-recurring expenses consignor. Actually, the consignor is going to spend expenditure once only for the consignment business, which are non-recurring expenses directly, which are non-recurring expenses. So we have to take 1/5 of the goods, 1/5 of the expenditure, 1/5 of rupees 1000, which would be 200. And next one is what? Proportionate non-recurring expenses of consignee. As we have already seen that out of 2,800, 300 goods are for go down and insurance, which we have to not take. So the remaining expenses is for what? For the consignment only. That means for the 2,500. This is. So that would be 500. So total is 10,700. Okay, that's it for this, friends. We can meet in the next classes. Thank you very much. If you like my videos, please share and subscribe.